Welcome, everyone, to the Saturday forecast for trade week call. My name is Steve Vetterl. If you guys could please, having a little bit of technical difficulties this morning. Let me, if you would please, in the chat window, see if you can see my screen okay. See if you can hear me okay. I think I need to get some new headphones here, kind of having some issues with them. This is what happens when you let all the children in your house use all your high-end headsets for gaming. Any case, welcome to the call. I know there's some new subscribers to the team. This is a weekend call. My name is Steve Vetterl. Today is the 29th of August. Summer's almost over. There's probably a lot of people that are looking forward to that ending and us getting back to normal. So let's go through the risk disclosure screen real quickly. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds, as we've certainly seen earlier this summer for the raging volatility that the accounts had. But before deciding to trade the foreign exchange market or use any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, risk tolerance, and most importantly, above all, can you afford to lose the money that you put to risk? A lot of people say they can, but we hear otherwise when things get ugly, and certainly losses can happen in Forex land. Even if you have the best software on the planet, it can and will take losses. So one must be able to, from a psychology standpoint, be able to understand that. Part of what my role is here. So do keep in mind, if you guys are sharing any results, whether it be Alexander, Iris, Einstein, any of the other new pieces of Force software that are coming out, please do not use the term company recommended settings. So we don't have any recommended settings as a company at AP. AP is not a financial advisory firm. They just license software that can be utilized and has default settings outside of the box. We have nothing to do with a customer's brokerage account. We don't solicit or take investments. We don't manage money. We don't recommend any brokers. It can certainly be learned where the good brokers are up from your up and down lines. So my settings are not company recommended. These are just the settings that I have and or the developers. So, all right. So the Q&A window is open. If you guys want to ask any questions, I'm going to go through the Forex calendar first. Remember, I'm trying to do quick hits on, let me just shift this over here. And move the Q&A window out. Okay. So we had, at the end of last week, we had the annual, what's called Jackson Hole Summit. That's where a lot of the central bankers, in this case, it was televised online. Nothing earth-shattering that came out of that. We have continued to see equity markets lift as hopefully countries, including ours here in the U.S., are coming out with some sort of vaccine. You know, we had both the election conventions from both sides, the Democrat and Republican. Nothing really earth-shattering out of either side that would affect the value of the dollar, right? Most importantly, and any other currency that's attached to it. As well. So we've seen a typical quiet last 2 weeks of the summer. Looking forward this week, August 30th, starting tomorrow through September 5th. That's the Forex Factor you guys should see on the screen. We have a whole bunch of news stories coming out. So at the beginning of any month, in many countries, you have the release of the employment report. We have that Friday. This is typically something that is a very large story. I think that much of the carnage, either good or bad, in global unemployment rates has been moderately factored into the markets during this pandemic. So I don't expect it to have quite the impact. Hey, news, could be wrong. Doesn't mean I'm telling you guys to trade on Thursday or Friday. But the important thing is that these events can and will have effects on currency markets. It'll have effects on money supply. It's impossible to foretell because my crystal ball's in the shop, where with the events we'll have big rates. It's typically the ones I try and stay away from are ones where there's an open Q&A forum, and all it takes is some sort of central banker to slip up and maybe disclose more information than he or she should have from the typical written notes that are released to the media before these meetings. That's where things can get a bit crazy. That has not happened that much this year. Does not mean that it won't. So it's always important to stay on alert for red folder events, unless you are an expert and or you feel comfortable with your software trading through all events. Okay. Even though we've seen a lot of volatility over the course of the last, a whole year for that matter, but we've had some real extreme parts that I'll go into again. But the developers are running this week. Seems like they're running every week, but there will be times when volatility is so high, unless you're an expert at this, it's just best to turn the system off for the week. Hell, we should have probably had the damn thing off, especially my own personal accounts and some of the accounts you guys see from us, including the big euro. We actually have another couple of accounts that got set up, and we'll go into that a little bit next Saturday. We'll be able to show you guys what we're going to put on those accounts. We've got some bigger accounts that we're going live with as well on different pieces of software, sort of putting our money where our mouth is, so to speak, at a higher degree with some of the newer software coming out. So from what I understand from talking to management, is that they are working on a press release, so to speak. It's going to be sent out on Monday. It's going to give a lot more details as to where the other 4 pieces of software are going to be released. Keep in mind the big, 800-pound gorilla in the room on this is getting this stuff coded via an API so it can integrate with the AP back office and subscription systems. This is no small feat. As little as I know about coding, just enough to be dangerous, I know that it is a fairly monumental task that is taking longer. And we'll get past that at some point and get it all released, because I'm just as impatient as the next person, right? So anyway, that's what's going on. So the non-farm you always get is in the US here on Wednesday. You can always click on these folders if you want to see what's going on and get more of a breakdown of the news story. But essentially that is the deal with, I don't really see anything else I want to address. Let's take a look at the charts. So this is the euro. As I mentioned many weeks ago, once we sort of bolted up into this area, I would have expected us to take some time. And I think we've put in a decent amount of basing, building up inside this tight range you guys can see between these 2 trend lines here. Essentially the 17 to the 19 areas have been holding and containing this movement. In a complete correlation to that, let's just say from at least a dollar perspective, notice where we are on the dollar chart. So I guess I should probably draw a trend line here so you can see what I'm talking about. But this area is holding for now, and I don't expect that to continue. I expect us to break below it. I don't expect that to happen next week. I could be wrong, but I think we've got, more of the ending of the summer, getting past the Labor Day holiday, which is mostly a U.S.-based holiday, obviously. The things start to heat back up in financial land. So as many of you may not know, the mutual funds out there, which, there's thousands and thousands of ETFs and mutual funds, many of them have their year ending October 31st, which you usually see in the prospectuses they send out to you. That creates, typically for the month of September and the month of October, certainly a lot more juxtapositioning inside the market. So things could certainly heat up and or go awry, which we want to be on the right side of it, lifting off, or in the case of the dollar, more than likely breaking down. So this is a daily chart of the dollar. Let's switch over to weekly. Remember, you kind of got to go back to see some of the bigger areas that are targeted for this move, which I feel is going to be right in the 85 area. So this is my target for where the dollar is heading. So we get a lot of questions. Okay, this is great, Steve. We're learning our technical analysis. We may or may not want to know to this level of depth. What does this mean for us? This means very simply is that if we break below this black line right here, okay, more than likely we're going to take a pretty decent trip. And if one software is on the wrong side of this trip, or you're fighting the train, as I say, it's the wrong side. And this is the problem I have with keeping such a narrow product bench, if you will, and why one needs to broaden out their product bench, which we're certainly working on as a company, but broaden out the product bench so we can have stuff that will chase the trend, right? That won't fight against it. And I think that's really important for those that are using Alexander. I think you have a distinct advantage if you're paying attention during this period of time, because as the markets begin to break lower, which would obviously send anybody trading this Euro US dollar higher, back to the daily chart, it's going to send it above the 19 level. I think eventually this is going to get to, we got to jump back to a monthly chart on this, right into this 125 area on this monthly chart. Each of these candles represent 1 month. But this is a big area that acts like a real magnet, as the 85 area would act as well. So the tough part about this is, as your risk manager, trying to help you understand technical analysis, what I know some of you may or may not be interested in, I think it's at the very least, pay just a tough attention to where we are and where we could go. That way, if it breaks, it's going to be much easier for you guys to accept trades, Euro US dollar, right? As longs, instead of accepting all the shorts they throw at you, unless we make a huge move and spend some time basing. Maybe it's the 125 area, right? In which case, I'd be more than willing to accept those types of trades. But if we break, and we break decisively higher, I'd be unwilling to, from an Alexander perspective, accept a lot of shorts being thrown at me as signals. And it's that simple, okay? For now, you're accepting almost everything, right? Because we're inside of that tight range. Back to the daily chart. We're inside this tight range basing still, okay? I know this probably seems to some of maybe more than you want to get involved, but I think it behooves you from the standpoint of trying to get better performance. Those that at least understand what's going on generally from just a macro perspective in the markets, you stand a much greater chance of having a higher win rate of not trying to fight the forces that be, right? And then you always ask yourself from a risk standpoint, hey, what if my thesis is totally wrong? What do I do, right? Well, what if our thesis is wrong and the euro falls below 117? What's going to happen? More than likely, it may tick down below it. And if it bounces right back up into this range or does what's called a full cross, that means more than likely it's a slight first signal that we're going to break out to the upside. Because the institutions and the big money movers, banks, there's about 12 of them that run this area, have signaled they're willing to defend the 17 area. And more than likely, that means that we're just going to burst out back up above 19. Now, the dollar's controlling this pair right now, okay? That could change, but for now, that's what's going on as far as this. So this means that for anybody that is dollar denominated in terms of imports, I don't know if you guys ever spent any time, but I would highly suggest, and this is a bit complex, but I'm going to show you guys my Telegram channel. Let's see if you can see this or not. If you guys could see my Telegram channel, just say yes. Just put a little yes in the chat window, please. I want to go back and show you guys this. Okay, cool. So occasionally I'll put some stuff on here that's kind of complex. It can be confusing, okay? I think this is one of the best. This is more of a manual trading thing, but again, this will help you understand charts. This is one of the best risk management diagrams I've ever seen done. And hats off to The guy that did this, I forget who it was, but it's was done in the Bitcoin US dollar. It doesn't really matter. It's just talking a lot about how you get untrapped and trapped liquidity, broadening channels. There's a little bit of a mention here of some of the different patterns. Obviously, is breaking out. This is actually a really good piece describing risk in trading. And then there's another one out here that gets into detail. If I can find the thing, that's a diagram of Forex. It's really good. This is one of the best I've ever seen. I forget who the hell it is. But it's in here, and it's a whole diagram of how the markets and money supply work. Not too far. But you guys can go through, and there's a lot of really good stuff in here, other than my ugly face every other turn. The hell is this? Okay, well, I'll just see if I can poke through and find it. It's a really good piece on how Forex and bigger markets work. But anyway, if I could find it, maybe I'll repost it because it's kind of hard to find. So that's pretty much all I want to say on Euro US dollar. Let's jump to USD JPY. This is acting a little bit differently than I thought it would, albeit we're inside still a very tight range, as you guys can see. Haven't really paid too much attention to this. The Euro JPY, again, spending that time. Obviously, I think this is sort of the tail wagging, the other tail wagging the dog type of thing, because for the most part, at least for now, the Euro's movement is going to be based upon, and the Euro strength, I should say, is going to be based on the weakness of the dollar. Thus, the yen sort of takes a third type seat in this particular type of correlation. So looking at, I can't get as much direction from this as I can from Euro USD. But again, we can certainly see the levels that we've been basing it up at this point. Support in the 124 area. If we broke out underneath this 124, I'd be unwilling to, I should say, breaking down into this level. I'd be unwilling to be taking let's do that. It's about right. You could argue for a little bit of movement down on this line, but really the key thing here is just wanting to see us breaking out one way or the other. All right, so S&P, as you guys can see, we broke out, and we have been trending up on the daily chart here. New highs. They love to dance around on CNBC and Bloomberg and Reuters and Fox Business. They all like to dance around and talk about new highs. I think a lot of the disservice is done to investors from an equity standpoint because they're just touting new highs, not talking about the ridiculous level of risks that's building up here. But typically you see markets lift into the election of a potential second term administration. So that's kind of the S&P for now. Notice gold, it's holding. This is GLD, by the way. This is the Spiders version of the gold market in an ETF. This is very, very widely looked at by all kinds of traders, especially in Forex land. We're holding essentially this area. This is beginning to kind of look like a pennant to me, which is a flag wedge type pattern that's building for potential breakout even higher. But I think this is going to be taking its direction, as most have, from the US dollar at this point. Don't really have much to say about oil. I know I've gotten a couple questions on it. I don't trade this because the oil market really, really has been quite manipulated this year. So I try to stay away from stuff like that. And it's been very flat. All right. So what else do I want to talk about? Let's take a look at the GBP USD. So this on the daily chart, let me draw this line. This is our liftoff point, and we have lifted above this point. Had a pretty decent move. Our accounts that trade GBP in a partial ring, which I'll show you next, have actually taken a little bit of pressure on them because of this break. And this is a perfect example of what I've been talking about a lot the last couple of weeks, is when something breaks above a level. Now it's spent really not that much time above this level. So the real determinant, as if we stay above this particular point, is the next couple of days. Will it prove to hold this area that it's in? But a break against this on Friday, I wouldn't have taken any shorts against this. It would have been only approving longs as it broke above this for those trading Alexander. And we'll see on, I'll talk about this more on Tuesday so we can see what's going on with GBP USD for the Sunday, Monday, and the Tuesday sessions. I'll have some more commentary on this right now. But just keeping one's accounts out of trouble, if you have Alexander, you have the ability to not accept stuff that's going against the grain. All right. Let's answer some questions, but let's take a quick peek at our accounts. So this is our live main Einstein ring, Euro USD. Everybody's loved the Euro JPY, USD JPY. Account has, if we look at the FX books, let's take a look at the account. That is the wrong account. So I got a question on this account. We start here. This is our euro denominated high volatility settings account. If you guys have never seen this before, this is myfxbook.com. It's a way to have your track record verified and trading privileges. That way nobody can show you a live or demo account with any BS made up about it, because you can't manipulate this stuff. This is why I always suggest everybody set up a MyFXBook. But this one's actually done well. So this is our best performance so far. The month's not over. It could fall apart next week. But this is our best performance so far. So we could put this account +7, or I think a lot of the naysayers that sort of bailed on Einstein or Alexander for the volatility they had are beginning to see, as we put more duration of data in force here with more history in terms of trades taken, you begin to see that this stuff really does work if you just leave it alone and you stop fooling around with it, right? So that's often why, and I think obviously the time will tell if we're trading low volatility and we have our stop loss set higher, as was partially my fault. I kept that 250 stop loss, and we took some heat in the other 3K live account that's denominated in USD. This is our euro account. It's done pretty well. We can't complain. Now the account is in a 632 euro drawdown right now. So not that big of a deal. But it has, taken a little bit of a decline from a pretty decent in terms of the absolute gain in the account's performance. But overall, up about 20% if we were to trade out flat on the drawdown that we are in. So hopefully we'll be digging us out. Notice these trades that are open are all from Friday. So it was just the heat that was brought upon the movements out of some of the Euro USD lifting up, especially with the breakout of GBP, at least on Friday, to new highs, recent highs, I should say. So win rates, what else do I want to say? It's pretty much it. Let's jump over to By the way, just a little test for you guys here. Here's the 40K live we're going to be showing you soon right here. Okay. Let's go over to our alternate. This is our alt performance account. This one trades a different ring. Okay. And it's taken a little bit of heat from the fact that GBP broke out on Friday, but can't complain, man. You know, this thing, this is a demo account, so we funded it with 3Gs, denominated euro, denominated US dollar, and the account's up 36%. And we have not messed with this high volatility settings. Yes, we're taking some heat on some drawdown right now, but I think that will give us a chance with some of the stuff that we've been taking heat on for, in some cases, a month to get to lifted back out. And, you know, it's funny because all these trades right here, for you Alexander folks, in the heat of these could have been avoided because essentially you've got some of these trades we're taking heat on. It's 6th level in the sequence, you know, so this is a big one right here, taking some heat. I probably would not have accepted that. Now, obviously, I don't have the time to be accepting and listening to my phone ding all day, which it already does from clients. I don't have the time to be doing all the approvals of the Alexander, but a lot of my team, they have that luxury, and their returns are much higher than what I'm showing you guys because they haven't taken a lot of those against the grain, you know, 5th, 6th, and 7th level sequence trades, which are the ones that really put the brutality on the account. So at this juncture, I've been more of a fan of Alexander just because if one wants to take the time and sort of go against the software, and by that I mean only not accepting trades you know are really, really fighting, fighting the team, fighting that freight train coming against you. I just choose not to do that. It's always much more profitable trading with the trend if one can easily identify it. All right. What else do I want to mention? Those asked a couple questions. Here is our alt ring. I'm not showing the screen because I'm suggesting you switch to an alternative ring. You're going to see in the next couple of weeks that there's going to be a whole bunch of different pairs brought into rings with the other releases of the software out there, okay? Especially Gearbox, which can trade a lot different types of currency pairs. You know, there's a lot of success in different types of pairs. It's, you know, obviously GBP NZD at the top of the list, but that's a much more volatile pair to trade, as we've certainly seen the power of the moves in that, which are fun to catch the right side of. And some of the software that was being released has caught some fantastic runs on different currency pairs. So if the rings that we talk about or the alt ring are becoming sort of old news, I show a lot of the performance inside the FX for that. For them who's asking the question about what the settings look like, this particular account, it just has a flat fixed weekly goal, 3%. That's it. So this is just shooting for 3%. The other accounts, we have trailing equity set up. Let me jump back. There we go. So we have trailing equity, as we always have since the start of this account, back towards the beginning of June. 2 and 1. Remember, when trailing equity is turned on, the fixed weekly goal becomes inoperable. So trailing equity starts 2, falls back to 1, trades get closed out. And it gives it extra time to do that, and that's what these closing trail outs are. So, first question. Good morning, Steve. Yes, good morning. Is the weekly goal based on account equity balance or account balance or equity? The weekly goal. So it's just on performance, 3%. Once the account gets up, account balance gets up 3%, you're out. Rick, good morning. By changing your trade settings while you still have trades on, can that impact the execution of the existing trades? No. But if you make changes to, and actually technically, I guess I could say yes, because if you change the stop loss, and let's say you're taking heat on something, it'll still hold the trade, right? And part of the mistakes we made, as we're sort of learning here to maximize risk when you're really taking heat, hence the increase of the stop loss to 500 pips if you can handle the heat. And remember, this is all based upon my genuine hope for everybody in our 5,000 plus subscriber land, which is probably going to be triple those numbers at the end of the year. The most important thing is do not put money to work that you can't afford to lose. And a lot of people say, well, I can't afford to lose, and then it's all good, right? And then somebody's hard-earned $5,000 drops down to $3,200 because the settings were messed up or the markets went awry or you went on the wrong side of all the trades. They start freaking out. If that's happening to you, you can't afford to lose the money. Probably put less to work. So one of my and I've been somewhat lax in getting this done, which is my fault. It's been busy this week, but I'm going to be shooting a video hopefully in the next day or two on trading psychology. It's about 5 minutes. Hopefully I won't be droning on too much, but I think the important takeaway from a risk management is not just what I show, but you have to literally build the mental fortitude to put up with some of the swings that come into these accounts. If you can't handle it with $5,000 swinging around here or there, how are you going to be able to handle when you have 100,000 in the account and it's swinging around a lot, right? So, and obviously the argument would be if you can't handle it, there are ways to mentally build yourself up, just like an athlete does training. And I'm going to give you some of those techniques in some of the videos that I'm going to release. That way I can always revert back to our onboarding setup videos, which I know the team's been hard at work at. And man, kudos to you guys. So some of these videos I saw were killer. You guys are making the bar higher for me, so I'm going to have to really put out some good effort and put on my best tie. Nah, just kidding. I don't wear ties anymore. So let's go to the next question. Let me delete these. The advertising team, preparing for the transition to the gold standard and the currency reset. I'm thinking the currency overmint will be swift. Life mastery, I'm not sure about that. So good luck to you on that one, brother. For the users of Einstein, do you suggest that we choose short or long only in the settings to avoid getting Nah, and I wouldn't with Einstein go in and start playing around with that stuff, you guys. I would not do that. That again, that would be me saying I'm smarter than the software, and I'm not. See some good questions here, you guys. Took a pounding this week, but I'm out now. Increased my total account equity risk from 60 to 80. We'll do what exactly with the software? You would just cast it a larger, wider net to take a heat. A lot of times the heat that these trades take, from just a very broad macro perspective, they do climb out. The software does have a great ability to climb out of that. It takes time in some cases. Some cases take a month. Look at some of our accounts trying to climb out, Okay, for this next question, let me put this back up for you to see. This is our alt pair. Steve, you mentioned the dollar index going even lower in the next couple of months. What is your view of the USD JPY? I already went through that, Marl. Hopefully caught that. Connecting this technical analysis to the actual trade executions might be tough. Potentially, it could always be tough, but just having an idea of where you think markets are headed gives you guys a big advantage. Yes, that's true, Dan. In Einstein, you can actually enable or disable longs or shorts in the common tab, right? But if I was to go in and detailed show people how to do that, here's what would happen. people would do that, and then the markets would turn around, and we essentially are stepping in front of the software and saying we're smarter than the software. And then I'd get a whole mess of emails from people saying, "Why did you tell me to turn it off?" Okay, so for those that just joined, looks like some of these questions you guys missed at the beginning. This is the Forex calendar right here. Non-farms Friday. I do not trade on non-farm mornings, I guess I should say, regardless of what it is, equities, futures, Forex, any of the stuff I trade for clients. I'm usually not trying to be a hero. Again, all about risk management. Stephen, a long versus short just means long, you're betting on the market to go up. A short, you're betting on to go down. You could profit either way. In this market, would you suggest setting the software to level 3? No, I wouldn't be getting into that, Carrie. Don't be messing with those settings, my brother. You guys are asking some good questions. Keep them coming here. So there was a question actually on the broad subscriber base, which I think is an interesting one, asking about does the number of subscribers have an effect on the results or the potential for all to have success? It would seem that we are all in and out at the same time. Technically, Tony, that's not true, because depending on your broker and where they execute, you'll all be in or out approximately around the same time, not all perfectly on the same second. A lot of it's going to depend upon your Forex broker. And for those of you, I think it was May 30th, if I'm not mistaken, we had a pretty good discussion. Tyler was on. We introduced the high volatility settings on the Saturday call. We talked a lot about brokers. So if you guys haven't seen that discussion, I think it's really important. We go into detail of how to figure out, just by looking at trade executions, whether your broker's playing games against your expert advisor, against the algo that's plugged in the MT4 platform for you. I actually learned a few things on that call myself, and subsequently, when I got a chance to talk with Norm Andrews, who's one of the owners of Lucror. I know a lot of you guys have accounts there. He's a good guy. He was explaining to me the games that get played by the vast majority of brokers out there. I knew that was the case. I didn't realize how pervasive it was in the industry. I mean, shockingly pervasive. I mean, just gaming against your software. So even if you had the greatest EACE and sliced bread, and the thing was just absolutely killing it, you can't get ahead in your account because they're gaming against you. I mean, that's just ridiculous. And by the way, I know probably for some of you that just only deal in Forex, this stuff does not go on to any large degree, if at all, on the other types of exchanges that are traded. So whether you're trading DAX on the Eurex exchange in Europe, or you're trading the S&P or ETFs or futures on the CME in Chicago, or stuff you're trading on the ICE platform, which is owned by NYMEX, which is owned by the CME, or anything, New York Stock Exchange, NASDAQ. I mean, all of this stuff, I mean, you would be shut out, locked up in jail for some of the stuff that I see go on in Forex. And I think at some point the pressure is going to make the industry change, but it is still technically the Wild West, in my opinion, with a lot of these brokers. That's why I think it's incredibly important to make sure you really have sort of put a suspect eye, if you will, on your broker. And again, I know this is not a discussion because we don't recommend any brokers. We can't, okay? Because if your broker does anything, wrong or slimy or shady, technically, we don't want anybody coming after AP saying, "Oh, these guys recommended." There's a lot of good brokers out there. It's just a matter of finding and making sure that you do, take a look at what the executions look like. Software launch, by the way, question. I wish I knew the answer to that. I know that we have a fairly hard date, I think, on one of the software releases, but the programming aspect of getting this hooked up to all the systems in the back offices for our subscriber has been a challenge. So we will get past it, though. I'll get some clarification on that levels question. I'm not sure I'm giving you guys the full answer on that one. Let's see what else. So that long question I asked about potential for all to have success. We're trading an exceptionally liquid market, where the euro US dollar is the most liquid of all currencies. It represents almost 30% of the volume in a given day. That's why I spend more time on that related to the dollar charts than I do on the other currencies as far as technical analysis goes. But we all can have success. I mean, there could be, which I know Sal and the team wants. I mean, there could be 100,000 subscribers, which at some point we will be at, and it would not affect the lucrative ability of the software to trade. If that answers your question. How do you see account history at the bottom? All right, so if you jump back into the MT4 platform, click on account history. Make sure you right click and download all history. Okay. Now you'll usually be able to see that because you can go all the way back and you can see the first transaction where you put money in the account or you activated a certain amount of a demo, right? And you can scroll all the way down and you can see where you are currently. By the way, I did notice this. This is a great trade, guys. See this right here? I mean, it's only one. I get it. But this is this is our least favorite currency. So here we are again with the trade. You know, this is only one trade. I get it. It's a pretty big one, by the way. It's 0.05. But it paid off. So you can make money in Euro JPY. All right, in this volatile market, do you think it would be more wise to set the software on lower max levels? No, I do not. In a volatile market, the best thing to do in the software right now is to make sure you have the high volatility settings active, essentially flip-flopping these two from the default settings that come out, setting your stop loss to 500. If you're trading the particular ring that we're talking about, if you're trading the alt ring, have your stop loss at 400. Set your accounts to trailing equity, not fixed weekly goal, right? Fixed weekly goal does not protect the account. And certainly trailing equity can't protect the account either if it doesn't go up 2%. This is not going to activate your hunter, if you will, or your security guard in the account walking around. It's not going to be active unless the account goes up 2%. Then trailing equity kicks in and will trail by 1%. And by the way, just to answer that question, the second question I see related to that. So the range between levels. So a lot of the alt settings that you see that are outside of the ones I talk about, we have a lot of really good traders in Europe that have different settings, obviously, than what I'm showing. The range between levels, this number is lifted. In some cases, it's 25. Some cases, it's 30 or 35. What that does, though, is that it just takes a lot less trades. It's only taking a much higher risk trades that are really, really rubber banded, if you will, from the current levels, essentially stretched out, kind of like, remember those beginning moves in either the dollar down or the euro US dollar up out of its breakout of that. I'll show you on the chart. This is a perfect cup and handle breakout, you guys. This pattern could not be more textbook for breakout. Right here. There's your cup. Here's the handle. We spent a good amount of time basing. We had almost a clear sailing, if you will, above this level. Remember, I was on these calls saying, watch this, watch this, watch this. If this breaks, I would not be short this market. I don't care what the hell the software is telling you. So in some cases, some people turned off Einstein on that advice, which actually turned out to be really good. And in some of our accounts, like Knuckleheads, we took heat on some of this. But I have a tendency to just let the demo accounts run because I want to just do a data collection of what all the trades look like instead of trying to step in front of it. And that's really the key thing, you guys. If you want to start a demo, And look, I get it with the subscriptions and all that. I think in a perfect world, you should have access to the subscription. You know, and this makes financial sense. Well, this is just me making a statement. You should have access to a demo and a subscription simultaneously. You can technically, it just costs more money to do that. So people are unwilling to have a demo running because they want to rather run it on live money. And hopefully you do that once you've tested out the demo for a period of time. And there's nothing wrong with testing out a demo for a long period of time, 6 months. I think the problem is, and by the way, guys, I have a new, very large client that is exhibiting everything that I'm going to be talking about in the next video that I'm shooting for the onboardings, and it's called FOMO. And it is a very powerful thing that is at complete work right now in tech stocks. So you have a lot of fear missing out. And this fear can absolutely wreck your accounts if you don't get it under control. And this particular new client I'm having to re-educate, which is a difficult thing because this guy is one of the top dealers in LA. He's been a superstar and a god to all his people for a long period of time. This guy's got a raging ego. And we are taking slow steps to break down his ego because this guy thinks he's God. And I knew this was going to be a problem taking on a client of this size because I doesn't have to re-educate him. But it's been a difficult process. You know, they'll see some stock that's hit CNBC or Fox Business and will call me up trying to chase it higher, IPOs, all that. I mean, it's just going to get this guy just buried in trouble with the millions that he has that he's slowly pissing away. Just one of the reasons he hired me. So please do not let the fear of missing out take over your life because it can wreck your accounts. I promise you, get it under control. There will always be opportunities to trade in the future. I promise that. Just like fish in the sea. Next question. In this volatile market, do you think it would be more wise to set the software on lower max levels? I just answered that question, didn't I? Yes. Let's not be a knucklehead here, Steve, and delete that. Should you continue to trade trades while in deep drawdown to plan not to take new trades? It depends, Anonymous, of whether or not you can stomach the deep drawdown. Software does have the ability to pull out of this with other trades. So I try not to step in front of the software and do that. Peter, the questions can only be seen by the moderator. I read them. My moderator. Do you close out trail day, meaning that all your open trades will close on the day selected? For example, if I have it set for Friday, will it close all of my open trades with drawdown and profits? So let me make sure I understand this question, Louise. Does close out trail day? Yes, that's true. That is correct. Is it possible to set trailing equity on one pair and fix a weekly goal? Now, T, I like the name, by the way. This is the good question that we want. And maybe there hasn't been, honestly, enough chorus in this arena to get this implemented. I actually do want to see that for Einstein. So that, something that, because honestly, if you can make the changes on each, let me jump over the other account. If you could make the changes on each individual pair, okay, one can be fixed weekly goal, the other can be trailing, I think that'd be great. Because it would reduce the risk, which is everything I'm about, right? In the account, having to do that, especially if you're taking heat. You remember back in the early parts of the summer, and to a certain degree in some accounts still, the Euro JPY was just absolutely terrorizing accounts. The others were doing pretty well, all things being equal. But this one, I would have loved to have just had turned off. So, and we actually got so close, even in the corporate accounts that we run, some of my personal accounts with live money, some of our other ones, just taking this pair out. But this particular trade, which is only one trade, I get it, is a great example of how when it's snapped back, it caught the right side of this particular trade. But I would like to see that implemented. That's up to the developers and Sal and the team. I don't know the answer to that question. I'm going to venture a guess at the average size of an AP trader's account, because keep in mind, guys, we have a lot of people as subscribers from all over the world. And some of them in some countries, $1,000 or $2,000 is a ton of money. So I would assume that the average subscriber's account size is probably somewhere near about $2,000. And that's only because we have a whole bunch of really big accounts trading this. Some of these accounts are in the hundreds of thousands of dollars, which lifts up the average. So the question was, let me open up the trailing equity window here. Can this be set to 0.5 rather than 1? The answer is yes. When you go to just double click on it, okay, just put in 0.5, then hit OK. Now your trailing equity is set to 0.05. You're welcome. Thank you very much. Thank you for the nice comments there, Kelly. I appreciate that. Is it easy to remove the pair when there's a situation like a share? Yeah, it is easy to remove the pair. You just click on it. It'll stop trading. You can actually remove it from the system and or go in and turn off the smiley face or just remove the chart as well. There's a couple different ways you can do it. Thank you. You're welcome. We will keep it going. Let me just go through quickly the chat window. By the way, if you guys get in the habit, put the questions in the Q&A, because a lot of times, I mean, you guys are welcome to chat with each other. It's fine. Put in links and stuff. Hopefully making sure that you're putting in links to my Telegram channel, right? As we need everybody over there subscribing. Okay, so one of the questions was asked in the chat window is, what does the SPX have to do with Forex? What's the relevance? There's a fair amount of relevance to it. There is going to be periods of time when the S&P 500, which is the 500 largest stocks, are going to be more correlated to what's going on with the US dollar, and times when they're going to be less. Right now, there has been a high correlation to the S&P 500 lifting and with the decline in the dollar. One of the other questions I got is, why is the dollar declining? I could talk for an hour on that one. It's mostly just due to the fact that our country is taking on a much higher level of debt in the trillions with all these bailout packages trying to save U.S. businesses from draconian, and I say that with extreme prejudice, draconian measures by some states' governments to shut the state down. Which is a mistake. In any case, that is the view of myself. That is not the view. I don't speak for everybody. Next question is, here's the SPX chart if you want to see it. And keep in mind, as we get more into this, you guys, I will probably venture into some maybe slightly deeper levels of technical analysis. I know that I've had a fair amount of interest in overlaying market profile onto Forex charts, which I'm going to see if TradingView will allow me to do. I know we've got a number of guys out there that are much more experts on TradingView than I am, but I would love to be able to overlay some sort of volume analysis on Forex charts in the aggregate. I think it'll be a tremendous insight for us. Would it make sense to reduce levels trying to reduce the losses? Yes, but the problem with a martingale strategy is if we're stepping in front of and messing around with the levels, we're basically saying we're smarter than the software. At this point, I'm not. You can, here's a question about range levels, guys. Let me just jump back to the screen since we're talking about this. There's our alt pair if you're interested. So range between levels is at 21 on all of my personal accounts and many of our corporate accounts as well. I know that there are some out there with range levels higher. But the problem with setting it at 25 or 30 or 35, and by the way, unless it's on really big money, And by that, I'm talking like over 50 or 100 grand, US dollar denominated type sizes. Um, you can always set it higher. The problem with that is it just doesn't take many trades. And the argument for the higher levels, then I've heard the chorus, I should say I've heard the argument is that and it typically is the case, the more stretched out to extreme levels of move is on anything that trades, the more it has a chance to snap back and revert back to the mean. Okay, so most markets that trade around the world are mean reverting markets. Some aren't, but most are mean reverting, meaning that once things get stretched, the natural tendency is for that rubber band or whatever you want to use as your analogy to snap back. So the most extreme out trades, which is one of the few times you'll actually see me break from trend analysis, and I will fight against that because we're so stretched out in some cases a 2 or a 3 standard deviation move out into a given area. I will step in front of the freight train in some of those cases just because we're so out there. And that's essentially what a martingale does. I mean, it just keeps putting on higher and bigger trades and bigger trades. The more stretched it gets, the deeper it gets into a 7 or 8 or 9 level sequence. But if you feel more comfortable and you want to play around with the settings, you're certainly welcome to change the range levels. If the volatility was much more extreme, there would be an argument for us to, on some of my accounts, to change the range levels to a higher number. But you're certainly welcome to do it. Do you like that long and drawn out answer? All right. What is the best 2 pairs to trade this week, or all 3 recommended pairs are good to go with default settings? Yes. Don't know how to pronounce your first name, but yes. Okay, so thanks for answering my question. What about if I had my account on trailing equity? Does the closeout trail day still affect me? Well, the closeout trail day right here, if this is what you're asking about, I like to call this is when the security guard goes home, right? So essentially it closes out on Friday. Some have the closeout trail day on Wednesday, right? There's an argument for that as well. I don't know that it's that important. I mean, as you may have heard, you guys typically win rates for trades in almost anything in Forex land have lower win rates on Thursdays and Fridays. It's usually much crazier time, which certainly can be said for what happened to GBP on Friday, right? So if you had an account that was all closed out, wouldn't have taken any of those trades on Friday. Which is certainly an argument for. Okay, so anybody that has, in my opinion, less than $2,000 in the account, I don't know if you guys ever seen. Let's see if I can bring this piece up here. Here it is. So I'm actually working on the notes. Let me shift over the screen. Working on the notes as I always do. This is not complete, by the way, but I'll just go ahead and share this. So this is a Word file here. Working on my notes for the weekend. The profit management type, which is page 2 through the rest of this, shows all the other settings. And I think hopefully you guys can see this. Honestly, if I were you guys, I would have this memorized. I would be able to recite this standing on my head after a case of beer, right? That's how you have to have this memorized because it's all about risk management, right? But, ideally with your question, if you have approximately 2,300 in euros denominated inside your brokerage account, keep in mind you have to do a little bit of currency conversion to what we're talking about here. But ideally, you want to probably just have 2 pairs, just like you see here. High volatility settings, 0.01 per 3K. So I'd be trading 0.01 as far as your starting lot size. Okay, Carrie Ann. She's going live for the first time since January this year. That's great. What pair do you suggest for $1,000 account? One pair, Euro US dollar. So really nothing else you can choose. And I hope truly for your sake, Carrie, that's $1,000 you can afford to lose. Just think about that carefully. All right, so start deleting questions. I'll be reading them again. Let me take a closer look at the Forex calendar for the next one. It's a bank holiday tomorrow for GBP, as you noted in the question. Yeah, I don't see any reason. It's the bank holiday. I don't see any reason not to trade GBP on Monday. The great thing about bank holidays is that, yeah, certainly there can be less liquidity, right? So if there's a bank holiday, banks are. Let me keep in mind that 3 or 4 of the biggest banks in the world that are big players in Forex, especially Barclays and some of the others, some of them are going to be closed. So that could affect volume, but only lowering the volume. Okay, good to see you. Yes, you're welcome. All right. If you understand choice one, your second choice. So, just like you see here, guys, we don't really deviate from this. My first choice would be Euro USD. My second choice would be USD JPY. But some would say, hey, no, that's not a good idea, Steve. We'd rather trade GBP USD as a second pair. Make sense? All right. Oh, look at that. It went over an hour. I love that. Do I love you guys or what? Jeez. Spending an hour on this call. Hi, Steve. Does the software operate differently another time frame other than daily? Does the software operate differently on another time frame other than daily? Yes, it does. So, Rupert, you can go down to 1 minute if you want. Please know what you're doing if you do that. As I joked with one of the guys in our team that wanted to do that, I told him he needs to write me a 1-page essay on why he needs to get down to it. And there better be some detailed discussion in there, which he could not come up with. Yes, thank you. Welcome. Let's see. Look at you guys gonna get some thanks here today. I thought I was getting no love. No love. Yes. Yes, you're welcome. I've had that recommendation made to me more than a few times. So, saying I should be on the radio. I'll tell you, if I could do anything, I would just do what Joe Rogan does. Man, is that guy absolutely killing it. Holy hell, is he killing it. Joe Rogan. Joe Rogan experience. Any case, just make sure there's a lot of questions here I'm scrolling through. In the future, guys, please put them in the Q&A when I make it easy for me. Yeah, our doc's on the call. Hey, you should have come on and said something, Ryan. Probably in the background making fun of me, throwing darts at my picture on the wall, right? All right, guys, I'm going to end this. Looks like we've got a lot of questions here. Yeah, all right, cool. We got them all answered. Cool. All right, everybody, please be safe. Let your heart not be troubled. At some point, somebody will find a vaccine cure to this. And that will be one of those stocks that will probably be overpriced, but I would still buy it because they're going to make a ton of money off this thing, or whatever sort of consortium of pharmaceutical companies comes up with this. But I'll have the notes out. This will be recorded. Please, as always, spread the word to your team. If you find you have team members that are having trouble, I can almost promise you they've maybe seen one of my calls or listened to one or two, in which case that is not good. So my name is Steve Vetterl. Today is the 29th of August, the weekend. Everybody go out and drink lots and have a great time. I'm off the mic.